In this presentation, we will enter payroll for the second month of operations. Note that we will not be entering using the paid payroll feature because we want to keep this problem so that we don't have to pay something over and above, including the add-on of payroll in order to complete it. We will have the paid payroll in a following presentation so you can see how the paid payroll will be set up. If you can set up the manual payroll, then you could try to enter this in the manual payroll as an example. The manual payroll is currently having some problems that are being taken care of at QuickBooks at this time. There is a workaround. However, we don't want to deal with the workaround in this presentation because we're not comfortable with setting up the workaround that we have seen for it. Therefore, we're going to set up the payroll as if a third-party payroll provider has set it up, such as ADP or Paychex. Those are the larger third-party payroll specialists, and then we will be entering that data from the reports that they provide to us into the payroll problem, into our QuickBooks file, into QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars QuickBooks file. We currently have the open windows open. You can open the open windows by selecting the View dropdown and selecting the Open Windows list. We are now going to be entering the payroll. That would be down here in the employees section. If you had the paid payroll, which you can set up here, or the manual payroll, which is free to set up, then you would have another icon down here, which would be to input the payroll information. We here are going to be working through this problem without the paid payroll set up. We will do a payroll problem after this, so you can see how it would be set up. And we're going to be imagining that we have the third-party payroll providing us the information. If that was the case, the third-party payroll would specialize in payroll. They put the payroll information together. They're going to give us that information in some format. They may link it to QuickBooks in some way, or they may just provide us with the payroll reports. If they provide us with the payroll reports, then we need to take that information, summarize it in some way, and put it into our QuickBooks file so it's on the financial statements. This is what the basic kind of payroll report would look like. It's going to be a simplified, basically, payroll report. We only have the 2 employees. We're now going to go down to the second month. This was the first month. Second month, same kind of transactions that would be taking place here. So we're going to start with Adam. Adam was a salaried employee, so we're going to have the same amount for the gross pay, 4583.33. We're going to have then the Social Security for Adam is going to be the Social Security of 284.16, and we're going to say that this was the Social Security, of course, that's being pulled out of Adam's paycheck. Then the Medicare is going to be the 66.46, and then the federal income tax that's going to be pulled out of his paycheck is going to be the 720. And so there we have that. I'm going to then calculate the net pay. The net pay will be equal to the total earnings minus the Social Security minus the Medicare minus the income tax, the FIT taxes. And so this would then be the amount of the net pay. Then we, as the employer, would have to pay over and above the $4,583 of wages that are earned by Adam. Social Security equivalent here. This is the employer portion of Social Security, the employer portion of Medicare. I know I'm doing this a little bit quickly, but we have another course just on payroll if you would like to take a look at that. Notice if you did the data input within QuickBooks, these would be calculated for you, as well as these if, and the net pay, if you have set up the payroll correctly. So if we set up the payroll all correctly, it should all calculate for us. It's really nice to use the manual payroll or actually look at a register like this so you can think about what is actually happening to it, because you do want to be able to review it. And payroll is one of the more confusing types of items to take a look at. All right, so then we're going to say that we have Erica. Erica, we're going to say is 800. Social Security, we're going to take out is 110. That's going to be the Social Security we're going to take out will be the 49.6, and then the Medicare is going to be the 11.6, and then the federal income tax is going to be the 110. So the net pay then is going to be equal to the 800 minus the 49.6 minus the 11 minus the 110. Then we have the employer portion, which will be equivalent to the Social Security and Medicare that we as the employer will have to pay over and above the wages of the 800. Now, this is a kind of a simplified type of register that we might see from a third-party provider that might give us this register. They might say, hey, we processed the payroll. Here's the detailed information that you need to now enter into your system in order to reflect it in the financial statements. So notice we have this information, and obviously they would also give us a lot more information, like the year-to-date information. This is for this payroll period. We also have the year-to-date information and so on. So when you get a payroll report, even if you only have a few employees, it's a really intimidating type of report to look at. It's got a lot of detail to it. But what you're looking for is something like this to break out the register type of information. Then we can take that and we can enter it into our payroll, our QuickBooks system. So if we go then into QuickBooks, let's take a look at the financial statements and consider what we need to be doing here. If we go to the reports dropdown, we're going to go to the company and financial. We're then going to go down to the balance sheet standard, and change the dates up top in the customized reports, dates of 01/01/20 to 12/31/20, January through December 2020. And then we're going to say OK. So we're going to have, obviously, the checking account we would think would go down because we're going to be paying the payroll checks. We know that the liability accounts should be going up. So there should be a payroll liability account that's going to be increasing. And then we know that the expense should be going up as well. That's on the profit and loss report. Let's go to the reports dropdown, company and financial, profit and loss, changing the dates up top from 01/01/20 to 12/31/20. We should have the payroll expense, this payroll expense account, including the payroll taxes here, which you might want to break out, but you can include them in one. Let's open another report, which will be the trial balance, which might make it easier to see considering we're dealing with multiple accounts, some being profit and loss, some being balance sheet. So we're going to go up top, reports once again. We're going to go down to the accounting and taxes. We're going to go to the trial balance, opening it up, changing the dates up top to 01/01/20 to 12/31/20. And so now we have this information all in one place. Now, as we think of the changes in these accounts, we typically think of them with a journal entry. Like how do they increase or decrease? We think of that with a journal entry typically. That's one way we could summarize this up. When we record it, we'll record it as two paychecks to reflect the two separate paychecks that were given to our two employees. So let's think about it in those two type of formats. If we were to format this data, same journal entries we had up top, which will be payroll expense. I'm going to do it for Adam first. So the payroll expense is not for the net pay, but the entire pay. Not the net, but the full pay. Then we're going to say the second account is going to be the same as up here. It's going to be the payroll liability. It's going to be what we withheld. And I'm going to include all of these in the payroll liability. So we're going to say all of this is stuff that we took out of the check for Adam in order to pay Adam's payroll liabilities for taxes, which includes Social Security, Medicare, and his federal income tax. So I'm going to do this with a negative sum function. If this is confusing, then just note I'm just adding these three numbers up and making it a negative, which is a credit for this worksheet. Then we're going to say the difference is going to be obviously, well, maybe not so obvious, but it's going to be the check. That's how much we wrote the check for, which is going to be equal to this amount, but it'll also be this number minus this number, or the negative sum. This is the plug formula, I would call it, for these items. And that gives us, of course, this number. So we've got the expenses, the liabilities, and then the check. So we wrote the check for this amount, but the payroll was actually this, the expense that was earned by the employee. We took their wages to pay their taxes of $1,070. Then we're going to have to pay our taxes over and above the $4,583.33 that Adam earned, and that is going to be recorded with a payroll expense. A lot of times people will break that out into another account called payroll taxes, but QuickBooks, usually when you have to pay QuickBooks or when QuickBooks processes payroll, puts them into the same account, so we will follow that tradition here. So we're going to say the sum of, and the reason you'd want to break it out is because when you fill out the 940s and the 941s, which are the payroll tax reporting forms, it's useful to know the difference between the payroll taxes and the payroll expenses. But again, we'll group them together because that's what QuickBooks usually does. Then we're going to have the credit, and the credit, once again, is going to go to the payroll liability account. So the credit's going to go to the payroll liability. And there we have it. Okay, and then Erica, same thing. I'm going to keep the accounts. So we're using the same accounts over here, just populating Erica's numbers. So the payroll expense is going to be the 800. It's going to be increasing payroll expense. The payroll liability is going to be increasing with a credit of the Social Security, Medicare, federal income tax. The difference then, 800 minus 171.20, or negative sum of these numbers, is going to be the amount of the check of the 628.80. Then we're going to have to pay over and above the employer portion, which is going to be the 49.60 and the 11.60. Payroll expenses increasing, payroll liability increasing. Now note, we can think of this as one journal entry as well, which means we could add these across and say, like, this would be kind of imagining as if all of our employees were one employee. And if we were just to enter this data as a lump sum into QuickBooks, we can just do it with one journal entry. And that would be one way we can get this data into our system in the quickest way possible. However, we might want to break out the two checks so that we have two separate checks that we can then check off when we do the bank reconciliation. That's why we're going to enter it with two checks. We also get to use a data input screen of a check rather than a journal entry, which might be easier for some people to look at. Okay, so then or we can say the total could be the total down here. Let's just total these up in this format. Let's sum these up, equals the sum, the 458333 plus the 800. I'm going to autofill that all the way across, putting my cursor on that, putting my cursor on this little autofill button and dragging all the way to the right. And all I've done is sum up all the way across. So now we can think of the total as basically one employee record the journal entry for the entire, all the employees at once. So we could say, all right, the payroll expense is going to be the 538333. The liabilities are going to be the negative sum of the 333.76, the 78.06, and the 830. And then the difference is going to be the negative sum, the plug formula of these numbers, or the 5383.33 minus the 1,241.82, or the 4,141.51, which matches our number up here. And then we have to pay the employer portion, which is the sum of Social Security and Medicare on the employer portion side. And there we have that. Now note, if we could add these across this way, and we get the 538333, which is this. We add these across this way, we get the 1,241.82. Add these across, we get the same number, and so on and so forth. So we could enter this journal entry in this format, these two journal entries, just with the totals, or one by one. We're going to, in essence, enter them one by one, but we will do so with checks. We'll enter a check here, we'll enter a check here, and then we'll have to do some other format because there's no check involved, no cash involved. To do a journal entry here, we will probably use the registers to do that. Okay, so now let's go ahead and record this. We're going to go to Adam Hamilton first. So I'm going to close this back out. So we're going to go back to the home, and then we're going to create a check. We're going to create a check. And we're going to create the first check and tab through here, and we're going to keep the check number. That looks good. We're going to pay it to Adam. So we're going to say Adam Hamilton, which is an employee, tab. QuickBooks is going to say, hey, do you want to set up the payroll and whatnot? And we're going to say no, because we're doing the free version. We're just setting this up now. And so we're going to say then the amount is going to be, and this is going to be the net check now. This is going to be for the net amount, which is either here or here. We're going to make the net check. All right, going back up. Net check is going to be the 3512.71. That's how much Adam actually gets. And that's the other side of it's going to be payroll expense. But the payroll expense is for the gross amount. The gross amount, which is the full amount. Not like it's gross or anything. It's the full amount, like nasty or gross. It's like the full amount. So is this 4,005? So we're going to say this is going to be the 4583.33. And then we could say payroll for February as the memo. And then we're going to have the other side going to, and notice it already calculates for us, 1,07062. That should be this number. and it's the sum of these numbers, 107062. That's going to be going to the payroll liability. So we'll say, all right, payroll liability, and that's going to be this one. And once again, I'm not going to use the QuickBooks payroll setup. I'll add the memo to those two. There we have it. Same kind of journal entry. It's a little bit reversed because what does this mean? Obviously, the checking account's going down by the $3,512.71, or it's a credit to cash checking account. And then the expense is going to be going up because it's a debit balance of the 4583. That's going to be the debit of the 4583, and then we're going to credit or increase the liability of the 1070. So notice this plus and minus thing over here can actually get a little bit confusing. The debits and credits, if you know them, are actually a little bit easier to work with. But in any case, there we have it. Let's go save and new and record the check for Erica. So we're going to say save and new. Tab through this again. And this is going to be for Erica. So Erica Robertson. And we're not going to use the QuickBooks stuff. And once again, we're going to set up the net check. That's going to be the net check, which is here or here. So that's going to be the amount of 628.80. And this is going to be payroll for the February. Then we're going to have payroll expense for the gross amount, however. The gross amount 800 here or here. And so the payroll is going to be the 800. Payroll for February. Oh, I don't know what happened there. I didn't mean to have something happen there. And then the other is going to be payroll liability. And we're not going to set up anything here. It's already given to us at the 171.20, which should match the payroll liability here and the payroll liability if we were to add these up, the 171.20. So that looks good. If we go back over, what's this going to do? It's going to be obviously decreasing the checking account, increasing the expense account here, and increasing the liability account. Let's go save and close. The next thing we need to do is record the employer amount. And in this amount, we don't have any cash involved, so we have to use basically a journal entry. Now, we're going to use the registers to do that instead of journal entries. To use the register, we have to use the payroll liability register because we only have registers for balance sheet accounts, not for income statement accounts such as the payroll expense. So let's find that. We're going to go back to QuickBooks, and we're going to then go to the lists up top. We'll go to the chart of accounts, and then we're going to be looking for the payroll liability. Here it is, payroll liability. We're going to double click on that. That'll again give us the register. So it looks like the check register, but we're in the payroll liability register. Therefore, an increase here means increase to payroll liability, increase to a credit to payroll liability, increase to payroll liability, and then a decrease would be a decrease to payroll liability, obviously. Okay, so then we're going to say that we have an increase to the liability of the 411.81, which you can find here, or it's going to be the sum of these two, 411.82, I should say, because that's the right number. So that's going to be 411.82, and then the other side is going to be going to payroll expense. Payroll expense. It should really be payroll taxes. These are the payroll taxes, but that's okay because that's what QuickBooks usually does. So I'm going to keep with that tradition, and we're going to say record that. Record that. All right. And then we'll close this back out and close this back out, and then take a look at what happens to our report. See if it does what we would expect it to, as we discussed before recording. Go into the balance sheet. We're going to see up top that the checking account should be decreasing. If I double click on the checking account, scroll down, we've got our checks here, one to Adam, one to Erica, our two employees. Double clicking on them, we see the detail of those checks. Closing this back out, closing this back out. The other side, we see that the liability account should be increasing. The liability account now should be appearing down here because we paid it off before, so it went away on the balance sheet, but now it's back. There it is. There's the 1653.64. If we double click on that, we see the detail. The detail of, we have Erica and Adam. Erica and Adam, double clicking on that, we see our paycheck. Closing this back out, closing this back out. Other side is going to be on the profit and loss. If we go to the profit and loss report, we then can see payroll. Here's payroll. Double clicking on payroll, we then see our payroll expenses, the 2 payroll expenses for Adam and Erica. These, of course, being the gross amount, not the net amount, not the amount they actually received, but the amount they earned. The money that we took from them is theirs. It's their payroll taxes. We're just required by law to pay it on their behalf because the government doesn't trust them to make the payment. So we had to take it from them to pay their payroll taxes. So if we double click on that, we have that. And then, of course, we had our payroll taxes that we had to pay over and above. These taxes aren't theirs. This isn't anything that they earned. This is basically the payroll tax that we had to pay over and above just because that we'd have to do that. So there's the 411. So if we close this back out, now let's take a look at the trial balance. If we go to the trial balance, you can double check your ending numbers here. See if they all tie out and everything works out. If not, you can go back and figure out, use the auto zoom, change the dates, check the date ranges. Or if you'd like to push forward without that, we do have backup files. You can restore the appropriate backup file and start wherever you would like within the problem from there.